Common misconceptions relating to crypto, I think people are not always sure, do they have to report what's taxable, what's not taxable, or they're afraid to report because they think they're going to owe money or they're showing losses so they don't have to report. But that's probably one of the biggest misconceptions.
Sarah DePino, tax director at CryptoTaxAudit. My intention in the show is to let others get to know our company, who the people are, and some of the heart and the passion that brings them to work in our unique space in crypto taxes. What advice, Sarah, would you give somebody? You meet him at a party, this guy who wants to get into crypto investing. What advice would you give him? Hello, everyone. Welcome to the Clinton Donnelly Show. I'm very excited to have a special guest on the show, our own Sarah DePino, tax director at CryptoTaxAudit. Sarah, welcome to our show today.
Thank you. Very happy to be here.
We met back in 2018. I hired you on to help me because I'd gotten into this crypto work and I had more work than I could handle. And you had some free time because your other job had wound down a little bit for the season. And you came on board. I think we're doing foreign corporation tax returns, FBARs, FATCA filings, as well as crypto audits, which are a very novel thing back then. What on earth made you want to come work for me? and why are you still doing it?
Yeah, I guess timing's everything. I think the stars just aligned perfectly when we did meet. After being in the accounting industry for over 20 years, I started at the Big Four, moved on to smaller regional and small town accounting firms, and was ready for a change, and just happened to be when you were also looking for someone in the tax field. And, we connected online, hit it off, and there's a lot more to it, but the rest is history, essentially. In the early days when you and I started, we did a lot of expats who had foreign components to their returns. And I think that the virtual currency just kind of naturally wrapped into that. And although in the beginning there may have been a lot of expats, it soon tumbled into people in the States, out of the state, everywhere that just had these virtual currency components to the return, which we were just naturally equipped to roll right into with all the reporting requirements.
It was fun. It was crazy. I mean, I think we've always focused on complex tax returns. I mean, if someone's not an expat, expats have a lot of additional filing things, and it's just a much more complicated tax return. Instead of a 10-page tax return, you're easily up to 50 pages. And the crypto there's so much about crypto that is foreign related. It's true. Hey, so when you came on board, you were doing return preparation for me, and I always reviewed your returns, but they were all just flawless. I just enjoyed talking. And in the process, we would discover different things about the law. And I remember, a number of customers, we just have to doing really crazy things. We really have to search the law and figure out how do we apply this. I should tell everyone, one of the reasons I hired Sarah was because out of the roughly 12 professional tax software packages, there's really only 2 that can support the level of complexity that an expat tax return has, in terms of foreign corporations, FBARs, FATCA filing and stuff, and also with crypto. And there's really very few people that are trained on these 2. They're really the high-end packages of the KPMG type of packages. And Sarah knew this, and it was natural. And I think we also had a connection because I spent most of my life in Connecticut as well, which where you're from. What have you learned through this process for yourself in terms of your own personal development? How's it changed you working at CryptoTaxAudit?
Oh, well, there's been leaps and bounds. I mean, the software was a huge thing, I think, on both ends, because I was very comfortable in the software we use, and I know it's a fantastic software. So there was really no going backwards after you've used the best. But yeah, in the beginning, you would review my work, and then soon you were like, okay, yep, that looks good. I trust you. And as things evolved, I evolved. Now, we hired additional preparers, and while I was still preparing, I was also overseeing their work and doing the review. And, at this point, I'm while I do prepare certain returns, or sometimes in some situations, for the most part, I really am the final oversight before any of our returns go out. So it really is more of a supervisory and final look in eyes to make sure everything that's going into the returns is correct and accounted for, so that we put our clients in the best position possible.
Well, I think one of the things that you've done so well, and maybe it's because of your background working at the Big Four, you've brought so much structure and organization to the operation, plus just doing the work in a positive, supportive manner, and not necessarily ego-driven, which some accountants and preparers can get into that.
Yes, definitely. If there's procedures and processes in place, it just makes things go a lot more smoothly and less room for error, because the accountant type A perfectionist, I don't want anybody coming back to me saying, you didn't do this or you missed this. We definitely have our processes in place to make sure that we are catching things as they come along, so that we don't have to deal with it later.
You prepare the tax return, and then at the end you have a call with a client and you review the tax return. And you and I have talked about it. So many, taxpayers, period, whether they're crypto involved or not, simply don't understand what a tax return is. I mean, there's a real educational element to talking to someone about their tax return. What do you see are some of the common misconceptions that taxpayers bring into the tax preparation process?
Well, common misconceptions, I would say, in the sense of relating to crypto, I think people are not always sure. They're getting better, but are not always sure, do they have to report what's taxable, what's not taxable, or they're afraid to report because they think they're going to owe money, or they're showing losses so they don't have to report. But that's probably one of the biggest misconceptions, that, oh, well, I didn't make any money, I had losses, so I'm just not going to report. But you're actually putting yourself at a disadvantage, because you need to report each year. Those losses are going to help you in the future. So report them this year so you can help offset the gains during the next bull run. You want to be compliant with the IRS. So working with a professional to get your taxes done and done the right way is just going to put you in the best position overall.
That's so true. That's so true. So many people think, well, I lost money, so I'm not going to report it. I remember back in 2018, before I met you, we had a client, I think he was out of Utah at the time, and he had massive gains in 2017, and his tax preparer didn't understand anything about cryptocurrency, and he just didn't report any of it on his tax return. I mean, massive. We've been talking in the neighborhood of like 800,000. I had a podcast with Crypto. Is it MM Crypto or Ivan Tech? I can't remember which one it was, but he called me up and said, I got to fix this. My tax preparer doesn't know what he's doing. He's paralyzed. And I know I made these gains. I want to pay the taxes on it. He was a doctor. He made a lot of money, but he was afraid of the taxes. But we were able to put like a creative, like-kind exchange application to that, really to substantially reduce his taxes owed. He got approved. And that's the type of thing that we can do for people, because up until then, he was paralyzed and afraid. He talked to one CPA, his own CPA, who was probably, an amazing CPA at everything but his cryptocurrency income, which had become a massive part of his income. So one of the things that strikes me, Sarah, in terms of as a tax preparer, I would gather my tax documents would come in the mail, and they'd say tax documents, and it'd be, oh yeah, Fidelity tax document. Oh, there's my bank tax document. I would just sit in the stack, and this stack would grow. It's like, oh, here comes my W-2 from my employer stack. And, somewhere along mid-February, I'd say, well, they're all in. And then I would begin the tax preparation process. But today, people don't get anything in the mail. It's all electronically delivered, and it's easy to forget. And that creates a lot of problems if you don't report all these things. What are your thoughts about this challenge?
It does. We have definitely come across missing documents. So one of the great things that we offer at CryptoTaxAudit is this audit defense membership. And even at the most basic level, we have access to our clients' IRS transcripts and account balances. So one of the processes we have in place is once the IRS releases those transcripts, which is usually in June, as we are preparing returns and going through the process, we will always grab those wage and income transcripts and cross-reference what the client gave us with what the IRS shows that they have on file for the client, and make sure that everything's accounted for in the return. And I came across a client just the other day who I sent him his, your return's ready. Here's your balance due. It wasn't anything none too great. And he set up a call with me, and the first words out of his mouth were, so I was looking at the return and I noticed that there was no distribution from the IRA I took, and it was a Bitcoin IRA. He took $200,000 out of, and he just happened to find this 1099-R in his spam folder that was sent to him back in January, but it wasn't on his radar. He just didn't even think of it, because most people who are not involved in the tax world are not constantly thinking about taxes like we are. So to them, if they don't get a document, they just don't get a document. And if it's not included, the IRS is still going to know about it, and you're going to get a letter. So, I think the digital world has made it a little more difficult in that sense, just to make sure you have everything that you need when it comes to tax reporting. But that's why, obviously, our membership is a great backfall to catch things. The same client also said, oh, I think I also had a distribution in 2021, and I went back and looked on my return and it's not there. But don't you guys usually catch that? And I said to him, well, are you an audit defense member? Let me go check. And it turns out he wasn't. So there's no way we would have known unless he gave it to us. So then we had a conversation about amending his 2021 and what the next steps would be. But I do think being aware and what the IRS has on your account versus what you've provided to your tax professional is key to staying out of their line of sight, so you don't get any letters and tax penalty and interest.
Now, the IRS searches for this stuff, and they see a big difference. Well, if it's a small difference, they send you like a letter, right? Like a CP 2000 letter saying, hey, think you made a mistake, think you owe us a little bit more. But when it's really big, then they flip it over to an auditor. Now they got a guy with a quota who wants to take a piece of flesh out of this. These things are significant. And crypto traders tend to deal in big numbers. I mean, shockingly big numbers. That's incredible.
Yeah, but even the little numbers too. So we had another case where somebody got selected for audit, and this was on their 2020 tax return. And the reason is when this individual entered their crypto activity onto their Schedule D, they put proceeds of $3,300 and cost basis of $0, because that's essentially what their gain was at the end of the day. So they said, I got to report my gain. And they got a letter because, lo and behold, a 1099-K was issued for $80,000. So the IRS thought they had $80,000 worth of income. So we amended, obviously put the proceeds at 80, 77 for the cost basis, showing the net gain was the same, but they still got picked for an audit. And that's just, then you can open yourself up to other things.
At our company, the thoroughness of our process that you just described, we've had almost nobody audited at CryptoTaxAudit. It's not merely enough for people to be compliant. You need to be thorough. And it generally involves something that you don't know, you don't think about. So we go back, like you said, we check the wage and income transcripts from the IRS to make sure that we know that we've accounted for all the 1099s, W-2s, K-1s, et cetera. So yeah, that is so powerful and important. So many crypto investors have massive amounts of money into crypto, and it's been a bear market. Everybody's really anticipating an uptick in their portfolio value towards the end of this year, particularly next year. I think a lot of people get really excited about how to make millions. And right now they're living on peanut butter and jelly sandwiches. They're going to have millions, and they're all very conscientious, and it's good. Good question to ask. What things can I do to save money on my taxes when I sell? How do you answer that question?
So I think a couple things come to mind. Good record keeping, so you have to have the records in order to properly report and make sure you are going to capture everything, including expenses or gas, whatever is going to factor into your overall income. And then one of the things that I work with our crypto analysts on is going through the gain calculation and deciding which method might be most advantageous from a tax perspective so that you get the best result and the lowest tax bill. Um, and then if somebody qualifies for trader tax status, maybe we're putting their expenses on a Schedule C for that, or, there's different things just to make sure we are maximizing any deductions that may be out there and available to a taxpayer.
Do you have people ask you, like, should I put all my cryptos in a corporation?
Yes. So most corporations are going to be LLCs that individuals use, and they're going to either choose a partnership or single member LLC, maybe an S Corp, but essentially they're all pass-through entities. So if you're the only member, all the activity from the corporation is still going to flow right down to your individual return. So you'll be able to add in expenses, and that might help reduce some of the tax burden on you. But overall, you're still going to see the similar capital gains and other income to the extent you don't have huge expenses to offset that. If you are using a partnership and you're pooling money, now maybe there could be some advantages to that with bigger investment opportunities. And obviously with LLCs, you have the liability and asset protection. But from the tax standpoint, it is still going to flow right back to your 1040, and you'll see it there.
So for many people who are just individual investors, creating a LLC to handle their investments really doesn't generate a tax savings in any sort of way. Actually, maybe add some complexity to their life.
Yes, it will add a little complexity because now you have additional tax reporting obligations. And if you don't comply with those, then you just open yourself up for some more headaches and penalties. So yeah, the average investor who is just a sole proprietor, essentially, if you do qualify for the trader tax status, you can still take expenses on your personal return, and you don't necessarily have to go through setting up an LLC.
What advice, Sarah, would you give somebody? You meet him at a party, this guy who wants to get into crypto investing. What advice would you give him?
Keeping good records is really important. Understanding that every time your crypto moves, there's a potential tax implication. If you're moving it from your one personal wallet to another personal wallet, there's no tax implication there. However, you might still need to code that activity as such so that the software that ends up processing your activity doesn't think that, oh, well, I had $10,000 of Bitcoin enter this wallet, it must be proceeds, when it's not. It's just an internal transfer. So I think the record keeping is really important, and understanding that your activity with crypto is going to generate taxable events, and you will owe tax and need to report. I think that's still kind of the gray area. And there are still plenty of gray areas within that as well. I mean, it's vast.
It's a vast amount of gray area in crypto.
Yeah, well, like staking rewards, the IRS wants you to recognize income upon receipt, but now what if it's a locked asset and you have the right to it, but you have not actually received it? Do you report it now? Do you report it later? There's definitely still a lot of room for discussion without getting into too much technical talk.
This has been really exciting, Sarah. I think just for people to hear you and hear how you manage people's tax preparation for individual business. And you're right, crypto is complex from a tax point of view, where we can work with a lot of flexibility with people on how they want to return things within the grayness of the law. And I really appreciate you talking about how when people become audit defense members, we actually get access to your records, and that enables us to actually help prepare a better, more complete tax return to make sure you don't get audited. I mean, that's the key thing, is don't get audited. Because once you get audited, things only get worse. And I want to say that I consider myself privileged to have you, Sarah, working for me, managing all the tax preparation team. I have complete confidence in you. I know that if there's an issue, you bring it to me and say, look, what do you want to do? How do you want to tackle this problem? And we really are professional in terms of how we dialogue about, what does tax law say? How do we interpret that? How do we apply it? And it's been a real pleasure to me to have you work for me and to take on such responsibility. I just feel honored. So I thank you very much.
The feeling is definitely mutual. It's been a great ride and only great things to come.
So we're going to continue to have fun.
Yeah. It is.
Well, hey, everyone, thank you very much. And I hope you see this is why at CryptoTaxAudit, I believe taxes are sexy because it's fun, and you got to hear it from Sarah. Have a great day.
Welcome to the Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn, or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.